Virginia Sutton, 71, from Clearwater, Florida, stepped on her bathroom scale on June 14th and saw 247 pounds, the same number she had seen for 3 years despite 2 different diet programs and a gym membership she barely used. Her doctor had recommended a GLP-1 medication 18 months earlier. Virginia called her Medicare Part D plan and was told the monthly cost would be $1,200 out of pocket because Medicare did not cover weight loss drugs. She hung up and accepted she would never afford it. 22 days from now, on July 1st, 2026, Virginia can walk into any participating pharmacy and fill that same prescription for $50 a month. $50. The Medicare GLP-1 Bridge program launches in 17 days, and it is just the first of 3 financial surprises hitting American seniors this month. The second involves 2.5 million SSI recipients who will receive 2 separate payments in July instead of 1. The third is a $6,000 tax deduction that millions of seniors who already filed their 2025 returns missed entirely and can still claim with one form. 3 surprises, 3 different government agencies. None of them are sending you a letter to explain what just changed. Virginia's story is not unusual. Approximately 14.8 million Medicare beneficiaries have obesity, according to CMS data. For years, Medicare Part D specifically excluded coverage for weight loss medications, even when those same drugs were prescribed for diabetes at full coverage. The GLP-1 Bridge program changes that starting July 1st, and the financial impact is staggering. A year of Ozempic or Wegovy at retail pharmacy pricing runs between $12,000 and $16,000 annually. Under the Bridge program, that same medication costs $600 per year, a savings of up to $15,400 per person. If you are a Medicare beneficiary over 65 with a BMI above 35 or above 27 with prediabetes, cardiovascular disease, chronic kidney disease, or heart failure, the next 20 minutes could change what you pay for prescription medication and what lands in your bank account this month. I am going to walk you through all 3 surprises with exact dates, exact dollar amounts, and exact steps to claim each one. But the third surprise, the tax deduction, has a catch that nobody is talking about, and it involves a deadline that most seniors have already missed without knowing it. I will explain that at the midpoint. Case 1. The Medicare GLP-1 Bridge Program. Starting July 1st, 2026, CMS launches a 6-month bridge program that provides GLP-1 medications to qualifying Medicare Part D enrollees at a fixed copayment of $50 per month. The program covers Ozempic, Wegovy, Mounjaro, and Zepbound, the 4 most prescribed GLP-1 receptor agonists for weight management. A recently FDA-approved Wegovy pill is also expected to be included. The eligibility criteria run on BMI thresholds. If your body mass index exceeds 35, you qualify without any additional diagnoses. If your BMI is between 30 and 35, you qualify with documented heart failure with preserved ejection fraction, uncontrolled high blood pressure, or chronic kidney disease. If your BMI is between 27 and 30, you qualify with prediabetes or a history of cardiovascular disease. Your doctor determines your BMI and documents the qualifying condition. You do not need a specialist referral. Walter Briggs, 68, from Phoenix, Arizona, was diagnosed with type 2 prediabetes in 2024. His BMI sits at 31. His primary care physician had recommended Mounjaro but noted the cost barrier. On July 1st, Walter's monthly out-of-pocket for that same medication drops from approximately $1,100 to $50. His annual savings, $12,600. He does not need a new prescription. He does not need to switch plans. He calls his Part D plan, confirms Bridge program enrollment, and fills the prescription at his existing pharmacy. One important distinction: the Bridge program operates separately from standard Part D coverage. The $50 copayment does not count toward your Part D out-of-pocket maximum of $2,100 for 2026. Some Medicare policy analysts argue this structure disadvantages patients who would hit their annual cap quickly under regular pricing. Others say the $50 flat rate is so far below what any patient would pay under normal Part D cost sharing that the distinction is irrelevant for most enrollees. CMS has stated the Bridge program runs through December 2026, after which a permanent Part D pilot program targeting obesity launches in January 2027. How to enroll? Call your Medicare Part D plan directly using the number on the back of your Medicare card. Say, "I want to confirm my eligibility for the Medicare GLP-1 Bridge program starting July 1st. If they say they are not participating, call 1-800-MEDICARE 1-800-633-4227 and ask which plans in your area have opted in. Not all Part D plans are required to participate. Private insurers had until January 8th to decide. CMS has not publicly released the list of participating insurers, which has frustrated some advocacy groups. The AARP has called for full transparency on which plans opted in and which declined. I would be curious to know, has anyone already called their Part D plan about this? Because in comments on our last video about Medicare changes, over 300 viewers said their plan representative had no idea the Bridge program existed. If that happened to you, ask to speak with the Pharmacy Benefits Department specifically. They handle formulary additions. Case 2. The double SSI payment in July 2026. This one catches people every year, and every year it creates confusion. Supplemental Security Income, SSI, is paid on the first of each month. When the first falls on a weekend or federal holiday, the payment moves to the last business day before it. August 1st, 2026, falls on a Saturday. That means the August SSI payment will be sent on Friday, July 31st. Combined with the regular July 1st SSI payment, that puts two separate SSI deposits in the same calendar month. For the approximately 2.5 million seniors receiving SSI alongside their regular Social Security benefit, July 2026 contains two SSI payments of up to $994 each, a total of up to $1,988 landing in the same 31-day period. The regular Social Security retirement benefit also pays in July on its normal schedule, the third for pre-May 1997 beneficiaries, and the second, third, or fourth Wednesday, depending on your birthday for everyone else. Doris Ramirez, 74, from San Antonio, Texas, receives both SSI and Social Security. Her Social Security retirement benefit is $1,340 per month, paid on the third Wednesday, July 15th in 2026. Her SSI payment is $443 per month, reduced from the $994 maximum because of her other income. In July, she receives SSI on July 1st, $443, Social Security on July 15th, $1,340, and a second SSI payment on July 31st, $443. Total deposits in July, $2,226, compared to her typical monthly total of $1,783. But here is the part that trips people up, and it has real consequences. That second SSI payment is not a bonus. It is the August payment arriving early. August will have 0 SSI deposits. If Doris spends both SSI payments in July thinking she received extra money, she faces a full month in August with only her Social Security check. Every year, financial counselors report a spike in senior hardship cases in August among SSI recipients who did not understand the calendar shift. Wait, it gets worse for a specific group. SSI has strict resource limits. For an individual, your countable resources cannot exceed $2,000 at any point during the month. For couples, it is $3,000. When two SSI payments land in July, your bank balance may temporarily exceed that threshold. And if the SSA reviews your account, they could flag an overpayment. Some benefits counselors advise spending or allocating the first payment before the second arrives. Others say the SSA accounts for the calendar shift internally and will not penalize dual-month deposits. The SSA has not published clear guidance either way, which creates unnecessary anxiety for recipients who depend on every dollar. The July 2026 Social Security payment schedule works as follows. July 1st, SSI payment. July 3rd, Social Security for beneficiaries who started receiving before May 1997. July 8th, second Wednesday, for birthdays on the 1st through 10th. July 15th, third Wednesday, for birthdays on the 11th through 20th. July 22nd, fourth Wednesday, for birthdays on the 21st through 31st. July 31st, early August SSI payment. Everything I just covered about the GLP-1 program and the SSI double payment. There is a third surprise that connects to your bank account in a completely different way, and for many of you, it is the largest of the three. If any of what I just said about these July changes made you pause and check a date or a number, hitting the like button takes 2 seconds and tells the algorithm to push this video to other seniors who need these 3 surprises explained before July 1st arrives. That genuinely matters, because none of these agencies, not CMS, not the SSA, not the IRS, are doing outreach to explain what just changed. Case 3, the $6,000 enhanced deduction for seniors. This one already happened, and millions of people missed it. The One Big Beautiful Bill Act, signed into law in 2025, created a brand new tax deduction of $6,000 for every American aged 65 or older, effective immediately for tax year 2025. If both spouses are 65 or older and filing jointly, that is $12,000. The deduction stacks on top of the existing standard deduction of $15,750 and the existing additional senior deduction of $2,000, bringing the total standard deduction for a single filer over 65 to $23,750. For a married couple both over 65 filing jointly, the combined total reaches $46,700. Why is this a July surprise if it was already available in January? Because the IRS is processing amended returns right now, and refund checks from 1040-X filings are landing in bank accounts throughout July. Seniors who filed their 2025 returns in January or February using tax software that had not yet been updated to include the new deduction overpaid their taxes. The IRS has acknowledged that early season software updates lagged behind the legislation. Anyone who filed before the provision was programmed into their software likely missed the deduction entirely. Raymond Nakamura, 72, from Portland, Oregon, filed his return on February 3, 2026. His total income from Social Security and a small pension was $38,000. His tax software calculated his standard deduction at $17,750, the base plus the existing senior addition. It missed the new $6,000. Raymond owed $1,440 on his original return. With the enhanced senior deduction included, his taxable income drops by $6,000, saving him $720 at the 12% bracket. He filed Form 1040-X on April 15th. His amended refund of $720 is scheduled to arrive in mid-July, approximately 12 to 16 weeks after filing, which is the standard IRS processing time for amended returns. The deduction phases out for modified adjusted gross income above $75,000 for single filers and $150,000 for joint filers. The reduction is $60 for every $1,000 over the threshold. At $175,000 single or $250,000 joint, the deduction disappears completely. The Center for Retirement Research estimates that the provision primarily benefits middle-income seniors, those earning between $30,000 and $75,000, with an average tax cut of $220 to $300 per year. Some tax professionals argue the $6,000 deduction effectively eliminates federal tax liability for many retirees whose primary income is Social Security. Because only 85% of Social Security is taxable at most, and often far less for lower-income recipients, the combined deduction of $23,750 can exceed total taxable income for millions of filers. Others caution that the deduction is temporary. It expires after tax year 2028, and that seniors should not adjust long-term financial plans around a benefit that may not be renewed. I know these numbers feel dense. 3 separate programs, 3 separate agencies, 3 separate timelines, and not one of them was designed to be easy to understand on the first pass. But the part that matters to you today is that each of these 3 requires a specific action on your part. Medicare will not auto-enroll you in the Bridge program. The SSA will not warn you about the double payment month, and the IRS will not flag your missed deduction. If you have made it this far into this video, you are clearly someone who does not let government agencies keep your money by default. Subscribing means you will see the follow-up video I am releasing next week on the 15 new drugs entering Medicare price negotiations this summer, because several of them are medications seniors take daily, and the price reductions for 2027 could save you thousands. That video connects directly to the Bridge program we just covered. This next part, a lot of people tune out because it sounds like a to-do list. Do not do that. These specific steps, done in the right order, could put between $700 and $15,000 back in your control over the next 6 months. The IRS Enhanced Senior Deduction is confirmed in Publication 554 for 2025, available free at irs.gov/publications/P554. If you already filed your 2025 return and did not see a $6,000 reduction on your deduction calculation, or if your total standard deduction was less than $23,750 as a single filer over 65, you likely missed it. Form 1040-X can be filed electronically through most major tax software or mailed to the IRS. Processing takes 12 to 16 weeks. There is no penalty for amending to claim a deduction you were entitled to. The IRS has 3 years from your original filing date to process an amendment. Gloria Whitfield, 66, from Memphis, Tennessee, filed her 2025 return on March 1st using TurboTax. Her software was updated by that point and automatically included the enhanced senior deduction. Her refund was $1,230, approximately $720 more than she expected. Gloria thought it was an error and nearly called the IRS to report it. She did not need to amend because her software caught the deduction. But her neighbor, who used the same software in January before the update, filed identically and owes an amendment. For the Medicare GLP-1 Bridge program, call your Part D plan before July 1st. Ask 3 questions. First, is my plan participating in the GLP-1 Bridge program? Second, what documentation does my doctor need to submit for eligibility? Third, can I fill the prescription at my current pharmacy, or do I need to use a specialty pharmacy? If your plan is not participating, you have 2 options. Switch plans during a special enrollment period if you qualify for one, or purchase directly through the TrumpRx portal at a manufacturer discounted price that will not count toward your Part D out-of-pocket cap. For the SSI double payment, mark your calendar, July 1st and July 31st. Budget accordingly. Do not spend both payments as if they are July income. The second one is your August payment arriving early. If your bank balance crosses $2,000 at any point and you are worried about the SSA resource limit, call your local SSA office and ask them to note the calendar shift in your file. The SSA's general information line is 1-800-772-1213. Now here is what nobody connects about all 3 of these, and this is why this video exists as one unified warning rather than 3 separate ones. The $6,000 senior deduction reduces your adjusted gross income. A lower AGI affects your Medicare Part B premium, specifically the Income-Related Monthly Adjustment Amount, or IRMAA. If the new deduction drops your MAGI below $106,000 single or $212,000 joint, you avoid the first tier of IRMAA surcharges, saving $67.90 per month in higher Part B premiums, or $814.80 per year. The deduction, the Medicare premium, and the GLP-1 eligibility are all tied to your income calculation. Miss the deduction, and your MAGI stays artificially high, which can trigger higher Medicare costs, which reduces the net value of the $50 GLP-1 program. These systems do not exist in isolation. They form an interconnected web, and the IRS, CMS, and the SSA are not coordinating to make sure the web works in your favor. Monday, call your Medicare Part D plan and confirm Bridge program eligibility for July 1st. Have your BMI ready and ask what qualifying conditions are accepted. Tuesday, log into irs.gov and check the status of your 2025 return. If your standard deduction total was less than $23,750, single over 65, or $46,700, married filing jointly, both over 65, begin a 1040-X amendment. Wednesday, mark your calendar for SSI payments on July 1st and July 31st. Set a budget that accounts for 0 SSI in August. Thursday, download IRS Publication 554 and review pages 6 through 12, which cover the enhanced senior deduction in full. Friday, if you take any medication for diabetes, weight management, or cardiovascular disease, call your doctor's office and ask whether a GLP-1 prescription is appropriate for your profile under the Bridge program eligibility criteria. The system was designed so that 3 separate agencies control 3 separate parts of your financial life, and none of them talk to each other for your benefit. Your job is to see the connections they refuse to draw. Virginia Sutton from Clearwater, the one who hung up the phone 18 months ago after hearing $1,200 a month, called her Part D plan on June 20th after her daughter showed her the CMS announcement. The representative confirmed her plan is participating in the Bridge program. Virginia's doctor submitted the documentation on June 24th. Her BMI of 38 qualified her without additional conditions. On July 1st, she will fill her first Wegovy prescription for $50. She will save $13,800 over the next 12 months compared to what she was quoted in 2024. One phone call, one form from her doctor, one program she was told did not exist less than a month ago. You paid into Medicare for decades. You filed taxes every April for 40 years. You earned the right to every program, every deduction, and every dollar these agencies owe you, not just the ones they make easy to find. In the next video, I am covering the 15 new drugs entering Medicare price negotiations this year. And if you thought the Bridge program was hidden, wait until you see which common medications are about to drop in price by 40 to 70% in January 2027. That video drops next week. The government builds programs and buries the instructions. Your job is to dig them up before someone else profits from your silence.